MTN Ghana Limited. We're going to go line by line breakdown of the income statement. So please pay attention. Please pay attention. All right. So officially, let me say good evening to all of you. This evening session is going to be the Q1 2026 income statement analysis and line by line breakdown of the income statement from the top line to the bottom line. That is the net profit. Top line is the revenue, bottom line is known as the net profit. Okay, we're going to go through that analysis for you. As we keep saying every day at every session, this analysis is not just for finance people, it's not just for the accountants or the accounting students. It is for everybody, the sociology student, the psychology student, the social sciences students that are afraid of maths. I must encourage all of you that let's all join. Last 2 years, since we began, we've had a mix of backgrounds participating and winning the competition. So in the first session, we had pharmacy students who won the competition. We've had people who read geography, who read sociology, and so on. So me, myself, I read sociology at the University of Ghana. So there is massive hope for everybody who takes this session or who take the classes very serious. Now, why read the income statement? So the income statement tells you whether the company is making money or not. It is the first story a financial analyst read. Normally, when they release the financials, the first document that a lot of people pick is the income statement. But for me, I did not pick the income statement. I picked the cash flow statement because I believe that cash is king, and the cash shows the financial or the cash position, the at real time of the business. I picked the cash flow statement, but for the purposes of what we are doing, we're going to look at the income statement first. When you pick the income statement, how people go straight to the bottom of the page and look out for whether the company is making profits or not. Right? And that is one of the easy decisions to make, whether the company is making profits or not. This morning we learned that the income statement or the profits are not necessarily the cash position. We saw that through the FCFE or the free cash flow calculations. So with that, we can determine whether there is cash sitting on the account or not. Now, this is the structure of the income statement. Let's first look at the revenue, what the revenue shows. That is the top line. So how much customers are paying for MTN services. Growing revenue is equal to business expanding. So once revenue is growing, it means that business is expanding. So we saw in the earlier slides that revenue for MTN grew by more than 3.5 times from 2021, from around 7 billion Ghana cedis to the excess of 24 billion by end of December 2025. So it shows that MTN as a company, the business is expanding. Now the cost also shows how much it costs to deliver these services. Falling costs means that business is improving or efficiency is improving. EBITDA, this shows cash the business actually generates before depreciation and taxes. This is a true operating engine. So the cash the business actually generates before depreciation and taxes. Earnings before interest, taxes, depreciation, and amortization. This is a true operating engine. And we have the profits. This is what's left for shareholders after everything is paid. And we call it the final score or the bottom line. Now, this is the full picture for MTN Ghana, the first quarter 2026. Total revenue for Q1 7.2 billion. Operating costs came to 2.4 billion. And this is what it entails. Total revenue, every CD collected from customers in Q1 2026. The costs, operating costs made up of network, staff, customer service, interconnects, device, subsidies. So all this goes into the operating costs. EBITDA is the cash generated before by operations before depreciation and taxes. So that comes to 4.4 billion or 4.5 billion. To total revenue, you take out the operating costs to come up to the 4.4 billion. Then you less depreciation and amortization, the wear and tear on towers, fiber, equipment over time. So when you are seeing the depreciation and amortization, this is what it means. And you come down to the operating profit, that is the EBIT. Okay, profit from running the business before financing costs. Profit from running the business before financing costs. Okay, that is what the EBIT depicts. Now, finance costs. Finance costs is interest paid on debt. So it means that MTN has some debt sitting in its books. MTN has some debt sitting in its books. That is the finance cost, so interest. So 753 point. And this one, we explained this morning that you can get the free cash flow from this via free cash flow. All right. So we move to the next item. Now, okay, so this is actually the breakdown of the income statement. So you're starting from the top line, as the revenue. Revenue is everything MTN Ghana collected from customers in Q1. Five distinct income streams. Data is the engine. We saw in previous slides that data contributes more than 50% of its total revenue. So actually 59% of the total revenue. So data revenue stands at 4.2 billion. So it's made up of internet, broadband, mobile data subscriptions, the fastest growing and the most profitable stream. This one shows that when you are using internet, now that we are doing the Zoom call or the Google Meet call, all the mobile data subscriptions that you have made, it goes or it fits into the revenue, and it looks like it's going to go up further and further. Voice revenue comes to 915 million. The traditional phone calls, declining customers shift to WhatsApp, Zoom, Teams. All right, and that's one we saw that it's dropped by a margin of just around 3%. Then we move to mobile money, which constitute 24% of the total revenue. That's 1.7 billion. Payments, transfers, airtime top ups, and all those ones now a separate entity. We explained yesterday, MMFL, but still consolidated in the pro forma. Okay, in the pro forma. So the IFRS is separate, as we explained this morning and yesterday. So with the IFRS, it is a reporting without mobile money figures, but the consolidated pro forma shows MMFL in addition. Now we move to the digital services. It constitutes 2% of the total, that is 170 million. So gaming, streaming, content, more by doubling every year. Now it's also growing gradually. So the key insight is that data forms 59% of the total revenue, voice is 13%, but and shrinking gradually. That is why the separation is very important. Others, as you can see. So this is a breakdown of the total revenue. This is a breakdown of the revenue for MTN. It's important that we understand this component when we are analyzing the business. Now, step two is operating cost. This is also the breakdown for the operating cost. That is a 2.8 billion, 39% of the revenue. So what's inside the operating cost? We have network and infrastructure, bandwidth, leases, fiber maintenance, generator fuel, tower rent, power bills. So MTN runs thousands of base stations across Ghana. Okay, staff costs, salaries for engineers, customer service, sales management. Telecom is a labor-intensive business, so staff costs form a very integral part of the business. Now, interconnect fees, payments to other operators when MTN customers call Vodafone, Airtel to go, etc. Every cross call costs MTN money. Then we come to the device subsidies. So MTN sells subsidized smartphones to keep customers. This is what they do. The margin loss is an OPEX cost. So they are spending in order to keep some customers. Now, customer service and support, call centers, chat support, billing systems, complaints management, expensive but critical for retention. These are all areas that MTN is investing in order to keep the business running. So they all fall under the operating costs. I think these are simple English. It's just an explanation of how the structure is at MTN Ghana. Now, the step three is the EBITDA, the operating engine. That's what we call it. So after paying operating costs, what is left? So EBITDA, the earnings before depreciation, amortization, interest, and taxes. This is the cash machine. So EBITDA is revenue minus operating costs. Revenue minus operating costs. Okay, so it comes to 7.2 minus 2.4. These are the figures that we've explained earlier in the slides. So it comes to 4.5 billion. So what EBITDA means, the cash the business actually generates from operations. It ignores depreciation and financing decision. The cash the business actually generates from its operations, ignoring depreciation and financing decisions. So EBITDA is pure operational profit. It tells you if the business model is working. So EBITDA is very, very important. So why investors obsess over it? Now, EBITDA margin 61.2%. For every one CD of revenue, MTN keeps point, that's in 61 pesos as operating profit. This is what it means. So EBITDA of 61.2 means that for every one CD, MTN keeps 61 pesos. MTN keeps 61 pesos. So 61 pesos is very good. Telecom is high margin business, usually between 50 to 65, and MTN is at the top of that range. Competitors like, this is Kenya. So Kenya, because we don't have any peers within the country, we picked Kenya, but that is too far for us. I mean, you don't have to bother so much with that. So why margins matter? High margin means pricing power. Customers pay MTN more than it costs to serve them. MTN can afford to invest in network, pay shareholders, and still grow. Invest in network, pay shareholders, and still grow. Low margin businesses are fragile. So high margin of 61.2 It's very, very good to run MTN business. And this margin has been improving year on year, quarter on quarter, across the period. MTN is a very strong brand. Now we move to depreciation, amortization, and operating profit. You normally see it as DA, depreciation and amortization. These are the figures as you can see on the screen. EBITDA minus D&A, you get 4.4. The figures follow as such. Why D&A matters? Towers and infrastructure. MTN owns thousands of base station towers. Each has a 50 to 30-year lifespan. Depreciation spreads the cost over time. Fiber and cables, underground and overhead fiber networks, depreciation 20 to 40 years. Equipment and technology, servers, routers, billing systems, switching gear, etc. Depreciation between 5 to 10 years. Why non-cash? Why are they non-cash? So D&A is an expense on the income statement but doesn't actually leave the bank. MTN spent the money years ago when it bought the tower. So just like any asset that you have, when you buy a car, it loses value. As soon as you buy the car, you sit in it, it started losing value. And depreciation starts eating. Even though it may not be money leaving your pocket immediately, you will not get the same value as you bought it. That is how depreciation works. So the insight is that EBITDA is what the business can actually spend. D&A reminds us that growth requires constant capex investment. EBIT is the operating profit. Revenue grew by 48%, and this is profit from operations. Compare that to EBITDA before D&A. These are decisions that you can make or areas that you have to watch when you're analyzing these kind of companies. So finance costs, the debt burden, We mentioned that finance costs, that means MTN has some debt. Okay, so interest payment comes to 753 million. Okay, profit before tax is equal to EBIT minus interest. So 3.5 billion minus this 753 billion, a million, sorry, that comes to 2.7 billion. So what is the finance cost? Finance cost is the interest paid on outstanding debts. MTN borrowed to build network. Banks charge interest on the borrowing. Okay, 753 million, that is 10% of the revenue. This is the cost of capital. Every quarter, 753 leaves the bank to lenders. Okay, high finance costs can eat into profit. If you borrow too much, interest crashes net profit, even if operations are strong. I mean, for us as individuals, it is important that we take note of this as we transition or we move into the entrepreneurship world. This country, there's high cost of interest, there's high cost of capital. So if you want to really do business, you have to be careful of the type of capital that you are getting. You have to do a lot of consideration, decide whether you are going for debt, when you are going for debt, what kind of debt you are going for, and whether you want to go for equity. A lot of businesses in the country have collapsed because of high cost of capital, that is the debt. So high finance costs can eat into profit. If you borrow too much, interest crashes net profit, even if operations are strong. Now we move to the interest coverage ratio. So EBIT divided by the interest. That is the figures as you can see. So we can see it's 4.5 times. Ratio is 4.5 times. This figure is healthy. It means that MTN earns 4.65 Ghana cedis in EBIT on every one Ghana cedi of interest. That is quite a safe margin. Now move to debt versus equity. MTN could have funded growth through equity, issuing shares instead of debt, but debt is cheaper because of their credibility they have in the system, because lenders have priority in bankruptcy. So credit analysts in bank, they don't apply the same rules to everybody. They don't apply the same rules. You will say it's not fair, but that's how it is. Somebody that works in a formal institution, I'm using individual as an example. For example, someone that works in the bank, when he decides to go for a loan from wherever, the rate that will be applied on the loan that he will apply for will be different from another person that is coming from the informal sector. So the informal sector, the reason being that the credit worthiness of both is different. So the assessment is different. So therefore, the rates will differ. The same way when a company, a very small company in within your area, so you can say within Medina Enclave, a very small company that is going up, going for a loan, the rate that will be charged on that will be different from the rates charged on MTN Ghana Limited. So it's important that we understand this. So the narrative will be that the debt is cheaper for MTN basis rather than from any other business. So we move to the corporate income tax. So before profit reaches to shareholders, which is the shareholders, Ghana's government takes its cut. That's what we call the corporate income tax. So corporate income tax currently approximately per the calculation around 24.5. I explained to you earlier, I think on Monday, that is yesterday, that the income tax or the corporate tax is important that you calculate. You can't apply the 25% on all of them. It is important that you calculate for it. So the income tax is 671 million, approximately 24.5%. The calculation 2.7 billion times the tax. That's what you are getting, 671 million. Okay, so that is the calculation for it. And this is the breakdown. Ghana's corporate tax, PBT, profit before tax, not all revenue is taxed. So goes to Ghana Revenue Authority. This reduces profit available to shareholders. So this is just a brief about the corporate income tax. Now we'll move to the net profit, the bottom line. We are moving closer to the end of the presentation. I mentioned that today we're going to close a bit earlier. I think this morning we did how many hours? 7:30 to almost 9 o'clock. So tired. All right. So we'll move to net profit, profits before tax minus tax. All right. And that's the computation, 2.7 billion minus the tax component. You come to 2.08 billion. All right. This is a breakdown, the net profit summary. It's a 2 billion. It's 29% of revenue. Earnings per share 0.187. This morning I explained how to calculate per share. It's one of the most straightforward ratio calculations that you can get. So it's the net income minus divided by the outstanding shares, as you can see on the screen. So for every 1 Ghana cedi, MTN collected keeps 0.29 as profit. That is the explanation to the 29% of revenue. Okay, and the calculation for the earnings per share, as you can see, is 2 billion profit divided by the issued shares. So each share earned this much in Q1. Quarterly dividend, MTN announced 0.06. New policy means that Scancom PLC will pay 0.03 and MMFL, Mobile Money Fintech Limited, will pay 0.03. The two put together will be 6 pesos. So if you're a shareholder of MTN Ghana Limited, you are getting this plus this per share. Last year, the full year dividend announcement was around 0.46. So this one is being paid for 2025 financial year. They paid 40 pesos per share as interim and 0.06 as the final. So that is what they are going to pay. Retained earnings comes to 1.9 billion. They are reinvested in network, debt paid down, or held as cash reserves. So retained earnings, okay, is 1.9 billion. Why shareholders should care about this? Profit means value. Higher profit means higher share price eventually. Dividends equal to cash profits paid out, immediate cash in your pocket if you own shares. Growth is equal to retained earnings, and the profit reinvested grows the business. Tomorrow's dividend valuation. Investors value MTN based on expected future profits, so DCF multiples, etc. So the valuation, you pick what you would want to use. Now the key metrics. So gross margin. So these are some of the ratios and metrics that tell investors whether MTN business model is healthy. So we have the gross margin, that is revenue minus OPEX divided by the revenue. That comes to 61.2%. Industry standard between 50 to 65. That tells you that MTN is doing excellently well. MTN is pricing power and operational efficiency. Operating margin, that is EBIT divided by revenue. It falls at 48.2, which also falls within the industry standard of 40 to 50%. It looks quite strong. When I say industry, we all know that MTN is sitting on the Ghana Stock Exchange alone. However, we decided to peg it with other companies within the African space. Okay, within the African space. So comparatively, MTN is doing well. Okay, you can pick any of the companies that are listed across the African continent and decide on doing the analysis as an industry. So for the banks, for example, you may decide not to use all the banks that are licensed by the Bank of Ghana. You just rely on the banks that are listed on the Ghana Stock Exchange, which is about 15 or so. So the 15 company or the 15 banks, that will be your industry benchmark or the industry pegging. Now let's move to the net profit margin. That's also sitting at 28.6, which also looks healthy. About 29% of every cedis becomes a shareholder profit. Return on revenue, that is also 28.6. Interest coverage 4.65. MTN cover interest 4.6 times over. Low default risk. And the tax burden, we mentioned that to be 24.5 or so. So that one too is within a range of 20 to 30, in line with Ghana's corporate tax law. So which also is not too high for a business like MTN. So this brings me to the end of the presentation. I would want to take questions